The most common question that I get when it comes to the TikTok lives or any form of social media is, what model do you trade? What strategy do you use? So today I'm going to go over exactly which model I use, how I use it, how I execute, and how you can do the same thing if you want to. Before we get into this video, make sure to join the free Discord, which is linked in my YouTube description. So let's get straight into this. So to keep it short and simple, I try and keep my model to a very, very basic standard. I've always overcomplicated trading in the unprofitable days. I was trying to do the most with the charts. I'd have loads of lines. I'd think that the only way you're going to be profitable is if you have some crazy model that needs 30 things that has to happen before you can get into a trade. And I feel like a lot of people are the same. Well, I know a lot of people are the same. And what my problem was is I didn't find one model. I would go model hopping. I used to call it strategy hopping, where every week, if the model wasn't profitable for that week, I would go and find another model. And what this did was I was never finding a successful model because I was never giving the model enough chance to work. And I realized that the problem wasn't the trading, the problem was my psychology. But anyway, that's a whole different topic. So today I'm going to show you exactly how you can trade the way that I do. So I trade a model called the DSE, Direction, Stage, and Entry. Very, very simple. It takes 3 steps, but these 3 steps are crucial that you get it right. And yeah, there's a lot of things in here that will teach you a lot about your psychology as well. So the first point to my model is we need to build a direction. Now, when I talk about direction is the most important part of trading when it comes to day trading. If you don't understand where the daily time frame is going, you do not stand a chance on the lower time frames. Now, a lot of people ask me all the time, how do I find daily bias? This is going to show you exactly how you can find your daily bias in the most simple and effective way. A lot of people overcomplicate daily bias. A lot of people are looking for daily bias but use the 1 hour, the 15-minute, the 4 hour to find a daily bias. I understand you want to use the lower time frames to find confluences to align with that daily bias, but you should not be looking for your daily bias on anything but the daily time frame. You're looking for a daily bias. Therefore, we need to be on the daily time frame so we can see where the daily candle wants to go. Okay, now daily bias is essentially where is the next daily candle likely to print. Now, how do we find this? So direction is the most important part of the model. We need to identify where the next daily candle is going. Now, we do this by asking ourselves 2 simple questions. What have the previous daily candles done? And where is the next draw on liquidity? Once you have answered these 2 questions, you will have your answer to where your next daily bias is, or what today's daily bias is. And a very, very big tip that I have for you boys straight off the bat is, if you can't answer these 2 questions, do not trade. If you don't understand where the daily time frame wants to go and you don't understand where the next draw on liquidity is, what chance do you stand on the lower time frames? None. Absolutely zero. There's a load of times where people come into my TikTok chat and say, I don't have a bias today, but I'm still trading. I'm thinking, what are you doing? You're simply gambling. We want to make trading the most high probability environment we can. And if we don't understand where that daily candle is going or that daily candle wants to print, we don't stand a chance on the lower time frames, in my opinion. A lot of guys in the comments might be like, yo, you're wrong. That's fine. If it works for you, it works for you, but that doesn't work for me. I need to understand where the daily time frame is going because everything on the lower time frame is following the higher time frames, okay? So we have to ask ourselves these 2 questions. Where is the next draw on liquidity, and what have the previous daily candles done? So I'm going to show you an example now, an on-chart example. So I know you can't see the overall picture, but just believe me when I say we were very, very bullish. So first of all, we need to understand what the previous daily candles have done. So let's analyze this chart. So as we can see here, we have tapped into a daily fair value gap after sweeping all-time highs. So imagine there was a line here. We have swept all-time highs, meaning we've had a daily break of structure. Now, after every break of structure, we usually see some sort of retracement. Now, our job as a day trader is to understand where that retracement may be to, because we are clearly overall bullish. So we understand that after every break of structure, we are going to have some sort of retracement. We have left a beautiful daily fair value gap down here that price has actually retraced all the way down to. Now, it is super important to understand the first question. What have the previous daily candles done? So what has this daily candle done? We've displaced lower, tapped into a daily fair value gap, and the daily candle has closed respecting the daily fair value gap. Now, if we look at something else, which is super important on this, we have another tiny daily fair value gap here. Do you see how we tapped into the bottom daily fair value gap and we are still respecting this middle daily fair value gap to the exact pip? Okay, in my opinion, the market is an algorithm, and these things aren't just luck. These things happen for a reason. So when we see things like this, when we see that we are overall bullish, we've had a break of structure, meaning we're going to get some sort of retracement on the higher time frame. We've had the retracement down to a daily fair value gap. Okay, now, not only have we had the retracement down to the daily fair value gap, we have closed respecting the daily fair value gap, okay? So, as you can see, we have wicked inside the daily fair value gap, and the day has closed outside of the daily fair value gap. If this candle was to have closed below this daily fair value gap, well, we would have had our answer there because we've inversed a daily fair value gap, that we are probably hunting for the next sell side liquidity. But because we have respected this daily fair value gap, the chances of us now going higher are a lot higher. Because we have respected the daily fair value gap, we are overall bullish, and we are hunting a buy-side liquidity. So the next question we now need to ask is, where is the next draw on liquidity? Well, for me, the next draw on liquidity is just the next high on the daily time frame. So for me, it was these highs up here. And yeah, that is essentially how I'm finding my direction. That is step one of the model direction. What have the previous daily candles done, and where is price drawing towards? Once you've answered those two questions, you'll be able to understand whether the next daily candle is likely to print higher or lower. So based on that analysis there, what we have just done, and understanding that we've tapped into a daily fair value gap and we are respecting the daily fair value gap, do you think price will print higher or lower? Well, if you answered higher, you were absolutely right. So as we can see, we ended up having a previous daily low sweep into the daily fair value gap, and we ended up going higher all the way to these highs as predicted. So now moving on to step two, we have the stage area. Now our stage area is where we stage our trades. We are not taking trades directly from here when the price taps our stage area. We are looking to stage our trade. We're not looking to just enter straight away. We are looking to stage our trades from these areas. So we've got our direction. Now the biggest point I want you to take away from this video is, if you can't complete step one, if you can't answer those two simple questions, do not trade. Me personally, I do not trade if I can't find a good daily direction. I want to be able to explain to everyone, I want to be able to explain to my nan why I have the direction that I do. And if I can't, then I simply do not trade. Do you see how detailed and how much description I gave of why and exactly why I think we're going to go higher? That is exactly how you should be able to analyze a chart. And if you can't, that doesn't mean you're a bad trader, and that doesn't mean you don't understand daily bias. It just means it's unclear. And if it's unclear on the higher time frames, the chances of it being unclear on the lower time frame, it's pretty much guaranteed. Okay, so once we've now got that bullish direction on our step one, we can now move on to step two, which is finding a stage area. Now that we understand our direction, we need to find our stage area. A stage area is any higher time frame point of interests or liquidity sweeps that align with our direction. So we are bullish. So now we want to be looking for any higher time frame fair value gaps, order blocks, rejection blocks, mitigation blocks, breaker blocks, previous daily high sweeps, previous weekly high sweeps, previous daily low, previous weekly low sweeps, previous session high and low sweeps. You get the gist, right? We now need to find a higher time frame point of interest that aligns with our direction. So we are bullish. So now, just before New York session opens, we need to find some sort of higher time frame point of interest that aligns with our bias, where we can be looking to stage our entries. Okay, now the reason why I think my model is so successful and it's very good for the psychology is because it's if you don't get step one, you're simply not trading. If you don't get step one, you're not even moving on to step two to even look for a stage. And if you don't get step one, you're not even looking for an entry because you've not got step one. So you're never in this stage where you're like, I might take a trade today. Because if you can't figure out where the daily time frame wants to go by looking at the daily time frame, then you simply not even looking at any other time frames. And it's only you who's going to know whether you're doing that properly or whether you're going against your rules and can't control your hands and still deciding to trade when you don't have that daily direction. But I unfortunately can't help you with that. And the realistic truth to this, I know I'm going a bit off topic now, but a realistic truth is, if you do try this model out and you come to me in a few weeks and say this model didn't work but I've seen success over the past 2 weeks, I'm going to be thinking, okay, my model's not the issue, you're the problem. You clearly can't control your hands, and this is where you need to really, really have a deep conversation with yourself and ask yourself, is trading really for you? Is it for you? Because if you can't say you're going to do something and then not do it, you're just gambling, and you may as well stop, and you may as well stop wasting money, because this probably isn't going to be your job if you can't do these simple things. So anyway, For the stage area, before New York session opens, we need to mark out any potential stage areas. We are not looking to take a trade from these areas. We are simply sitting on our hands until they have been met. Then, when it's met, we are waiting for our entry confirmation. So, before New York session opens, this is just before New York session opens, okay? We are marking out any higher time frame point of interest that align with our daily bias. So we have the previous daily low here, and we have a daily fair value gap that sits right beneath it. These are textbook days. When you have a previous daily low and your bias is high, your bias is bullish, and you have a higher time frame fair value gap that sits right beneath it, or any higher time frame point of interest that sits beneath it, these are A++++ setups, okay? These are the stage areas that get me excited, okay? Because these are the ones where we have two higher time frame confluences that align with the bias. So we are sitting on our hands until these stage areas are met. This is a really important point. We are not looking to take any other trades. We are not looking to take the trade down to here. We are not looking to take... we are not looking for anything else other than our stage area being hit. We are sitting on our hands. And if some of you can't accept the fact that you can't take a trade until these areas have been met, well, I'm sorry to say, but you can't be a trader if you can't sit on your hands, okay? As we can see from here, the same direction example. Before New York session opens, I mark out my stage areas, which is the daily fair value gap and previous daily low sweep, which aligns perfectly with my bullish bias for the day. We are sitting on our hands until this area has been met. We are not interested in any trades until this area has been met. So many of you guys that sit on my TikTok lives and ask me, why don't you want to catch a short down to the stage area? Because I'm looking for the most high probability setups. There's nothing to say that we don't even come and tap this stage area and we just fly higher because my direction's bullish. Okay? And this is the thing. I don't need to be trading every single day. I am waiting for the most high probability setups to form before I take anything. Okay? And I think this is the mindset shift that some of you boys need to start to understand. Stop looking for these low quality setups that you think you can just get in quick because it's clearly not working. Wait for the highest quality setup to form and get good at waiting. Get really good at becoming patient. So once we found our stage area, we are now sitting on our hands until that stage area has been met. And then we are moving on to the final and the most simple part of the whole model, which is our entry. So our entry is the last part of our model, and it's the most simple in my opinion. All we are now waiting for is clear displacement away from our stage area, inversing some sort of fair value gap, and we are good to go. The reason we can be so aggressive with our entry is because we already know the higher time frame draw, and everything on the lower time frame follows the higher time frame. A lot of you guys are like, you're being so aggressive. How do you know this is going to go well? Because if we're getting clear displacement away from our stage area, which aligns with our daily bias and our daily draw on liquidity, why can't we be aggressive when we have tapped into some higher time frame stage areas? Okay, this is the things that you boys need to start to understand. You can get aggressive in the right scenarios, okay, when you have 5 confluences behind the reasoning of why you're getting in, which is exactly what we did on this example here. So as we can see, this is the same example. Price tapped into our daily fair value gap and a previous daily high sweep. Do you see how we're respecting the daily fair value gap even on the 2-minute chart? We then waited for this 2-minute fair value gap to be inversed. We then took the trade all the way up to this last fair value gap of the range. A nice, 1 to 2.5, 1 to 3. This is how simple my 3-step model is, okay? I've gone over it pretty quick today. If you do want to join the group mentorship where you can learn exactly how to trade like myself, along with other traders who are also learning how to trade like myself, then make sure to hit me a DM and I can see if you will be fit to join the group mentorship. I hope this has helped. Make sure to follow my Instagram. Make sure to give this YouTube video a like and comment and subscribe. And yeah, I will see you in the next video.